Hello everyone, this is Andrew McNair from SWAN Capital with our January 2014 Economic Update. In this month's video, we're going to be talking about some of the events that drove markets in January, as well as what to expect potentially in the days and weeks to come. Now, as always, please stay tuned for the following disclosure statements after this video. If you haven't noticed, markets unfortunately ended on a down note for the first month of 2014. This was driven low largely by the emerging market currency crisis that is starting to affect economies of countries like Turkey, South Africa, and even Brazil. While these issues haven't affected the U.S. economy, they are being felt in the volatility of the U.S. stock market. For the month, the S&P 500 fell 3.56%, the Dow 5.3%, and the NASDAQ sank 1.74%. While it's never fun to watch a sell-off, we're happy to report that the U.S. indicators or fundamentals show that the economy is still growing modestly. Investors finally got their first look at fourth quarter GDP in 2013, which stands for Gross Domestic Product, which clocked in at a solid 3.2%, giving us high hopes for 2014. Earnings season also began in January, and with nearly half of the S&P 500 companies reporting in that a growth stands at 7%, the best showing we've seen since fourth quarter of 2012. Also, revenue growth is up at 3.5%. Now, if we take our focus to the job market, unfortunately, it showed a troubling decline in job creation in the December report. But January's weekly unemployment claims painted a rosier picture, indicating that the December report was tainted potentially by seasonal factors. Though we don't have all the monthly data in, we are predicting a significant bounce back, putting this labor market back on a positive trend. Now, all this currency crisis started with the FOMC meeting that met last week of January, and it voted to continue the program of tapering some of this monthly bond purchasing by another $10 billion a month to only $65 billion a month. Investors see this move, though, as a sign of confidence that the economy's recovery is coming along. You know, we still got a ways to go, but we're getting close to being fully recovered. However, overseas, the Fed's tapering of quantitative easing policies, compounded by local political and financial instability, is helping drive this currency sell-off that we're seeing in the emerging markets. Investors are fleeing local currency and they're buying U.S. dollars. Over the last few years, though, investors have poured money into these developing economies in search of higher returns. But now that the Fed is cutting back on its easy money policies, weak fundamentals in these many emerging market countries are being exposed. Investors are moving capital out, driving down the currencies and threatening growth abroad. While these problems haven't affected the U.S. economy yet, a prolonged emerging market currency crisis won't be good news for the global economy as a whole. And some U.S. economies may see that their growth prospects fall because of the declining demand abroad and overseas. Now, it's too soon to know how the whole situation will play out, but we're watching it carefully, and we're actively trying to develop strategies to mitigate the risk for our clients. Looking ahead, investors will probably see more of these choppy days as we wait to see how the emerging market currency crisis will shape out. But there are still domestic economic indicators that are showing solid growth. Now, I want to share with you that we do have 2 veteran aid and attendance workshops that you can check out at the upcoming events tab at swan-capital.com if you want some more information. Now, once again, this is Andrew McNair from SWAN Capital, signing off for the month of January 2014. And I hope you found this commentary interesting and informative. And we'd love for you to drop us a comment in the comment section below. If you have any questions, give us a call at 380-9558. That's 380-9558, and we'd be happy to talk with you.